region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Wednesday, June 25th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, July corn down 4 at 4.12 1/4. July soybeans are down 3 1/2 at 10.43 1/4. And July Chicago wheat was down 3 at 5.32 3/4. No export sales announcements here this morning, so we'll jump right in. Weather's good. The ceasefire appears to continue to be holding between Iran and Israel, which is a good sign. So that's kind of calmed some things down here a little bit, just geopolitically. But other than that, guys, at the risk of sounding like a broken record, this thing just continues to grind lower. There's nothing to really get us that excited, and I don't know what else to say there. But Ben, maybe give us a few thoughts that's on your mind, and we'll throw around the room.
Yeah, we've talked for 10 days about heading into this, the importance of kind of Friday through Monday. There seems to be an endless offer in the market. And, we did see yesterday a little bit of short covering in the July sub spread. I think it's worth noting that, when you get into where we're at now, we're up into kind of PLC right there where that kicks in. People that took our county, or depending on where their yields at, Dustin did a great job of explaining that in the wire, that depending where your yields are at, you're starting to get into payments there, and that's before we even get to your regular federal crop insurance levels below the market. So there's you get to a point here where there is a little bit of maybe a pullback from a grower's willingness to sell. But I think everything is about first notice day in this report on Monday. So you just got to wait it out and see what they want to do. I think we did make a new low in December corn by just a little bit overnight. So we'll just wait it out and see what happens here.
Yeah, Justin, this market sucks. I mean, I know we keep talking about getting July off the board, and it's been, but I mean, you look out forward too. It just seems like it's like a greenhouse out there, apparently. And until we change some kind of a weather deal or whatever, I mean, we're stuck.
Yeah, like you said, I mean, we've been talking about this for a while, so it's hard to keep saying it over and over. But it just feels like a classic break into first notice day for a lot of different reasons. And the weather, there's nothing to bail that trend out. The funds are piling on because they keep making money. The trend has been for these guys to press it until it doesn't work. And the cash market's not bailing them out. There's not, no one's willing to step in. The spreads are staying wide. They're getting wider. My guess is there's old crop bushels that probably got to be cleaned up going into first notice day. There's, a lot of different things. Obviously, there's a big safrinha crop. It's been kind of slow to harvest, slow to, their cash prices have actually been going up. I think part of what Dustin's been talking about, the real, their prices have gone down even faster than us over the last month or so. So yeah, you're kind of just putting the screws in the market, and there's not enough reason for anybody to step in and take the other side of it, to be honest. Weather's too good. The models always try to threaten some, dryness out forward, and then you get closer, they put a bunch of rain in. And I do think there's going to, it's raining right now. It's the seasonal. We'll see how good. I mean, we are trading really good stuff. So at some point, my guess is we'll overdo it here. That's you're trying to kind of pick a bottom, but that's why this report, a lot of times can be a turning point. This could be one of those years it's not at all, and it just continues to be crappy. As far as like the government support levels, in the short run, it probably doesn't matter. I mean, if the farmer doesn't sell, that just probably matters once, that the shorts try to cover something and there's nothing there to get them out. Right now, they're probably timing some sales that have to happen with old crops. So they're kind of they'll probably get bailed out a little bit here. But I'll be curious after first notice day, because now you're going into how much corn is really left out there the last couple months of the year, and how much of that's not even priced. So we could see decent stocks number, but is it all unhedged? That's the hard part to know. And most of that could be sold and just taking advantage of storage that they've had and things of that nature. Timing for when they can move stuff. They've been busy planting, so yeah, we'll see. I kind of still feel the same. It's going to be tough until you get some new information.
So in your opinion, I mean, the market right now is saying that record yields until proven otherwise. Is that the mindset?
Yeah, I think probably trading the government numbers and maybe a little higher, but as far as like let's say like old crop corn, if you think you're going to have a 182 or 3 or some number and corn acres aren't going to go down, and that the market feels confident that it will have a 2 billion type carryout, the commercial might not feel like they have to reach up and get old crop corn. That being said, we have seen really good demand numbers. So the only thing, it doesn't really make sense that, it's not like demand's down. It's not like margins are really down. We're shipping a lot every week. It could just be that we find out we have more corn in the end. And that's why it's just speculation right now. It's speculation based on how the market's acting, is really it, because you're not necessarily seeing cancellations in sales. You're not seeing shipments go to zero. They've actually been really robust for corn. Ethanol production's been good. Assume feed demand's been pretty stellar with what animal prices are doing. So the only thing you can say is like the way that the spreads acts, right? It acts like there's more corn out there, but we'll know on Monday, I guess.
Yep. Dustin, anything to add?
Yeah, just stocks, they act like they're bigger than what I think we're calling for a 350 million bushel reduction in corn stocks on hand as of June 1st compared to this time last year, which would that would explain a 1.365 billion bushel carryout projection from the 24 season going into the 25 season, which is really quite tight, right? That's the 6th tightest year in 36 years for marketing if you just take stocks divided by usage. And it's a very believable number. If you look at like the estimates, there's nothing that suggests that if we were accurately projecting Dece 1 stocks correctly, March 1 stocks correctly, the past 2 stocks counts were correct. Usage should be right in line. We've got pretty good usage figures from the USDA already. So we're basically saying that we're kind of a little bit elevated in line with this third quarter usage. So a 3.5 billion bushel disappearance. I mean, by all accounts, is what's justifying this move lower? Is it just because, yes, we're very tight on stocks, but it doesn't matter because we've got 2 hemispheres? That could be it too. Or buyers got ahead of it. Right, there was a lot of coverage going into it, and there's an orderly transfer of bushels from grower to buyer. We'll see on Monday. Well, I think in part some of this may be a bit of a positioning problem, and if it comes out that we're at a 1.365 billion bushel carryout on Monday, or implied one, right? If the estimates are in line, then chances are there might be some post first notice day rebound, in my opinion. Just because I think there's so much pressure contractually for so many market participants that are on the long side of this market to make a sale or a roll prior to the end of this week, right? If you jam that position into a 1 week time frame, that can help explain why we have accelerated sell-offs going into first notice day, and then slight rebounds. That's been the phenomenon for the last couple of years, at least.
So Dustin, just to add to that, because think about too, when we were making the highs in February, what's the managed money position? Was it sold off 500,000 contracts in that time frame?
Right.
That's 2.5 billion bushels on paper. that have been sold during that time frame. Going in, and they're continuing to sell going into this time frame. So, the problem with first notice day and like talking about O crop, like if it's tight, it's going to be a game that's played by a handful of people because it's only certain participants that can trade those, on the futures at least, right? So you might see some big basis moves in the end. You might see, the July contract have some fireworks during delivery, but again, you're talking about a handful of commercials, some very large spec traders, but most of those guys don't even want to touch it because it's a tax nightmare to take delivery and play that game. So that's kind of the problem with it, right? Is like, what does it mean? Even if it ends up being very tight in the end, very few people left that can play that game. And maybe that's what the market is doing. It's getting out all the people that have been playing. It's going to be tight. It's going to be tight. It's going to be tight, forcing those people out going into first notice day, right? It's part of that phenomenon.
Sure. Yeah, no, I agree with that. And I think it's, that's where the positioning problem comment comes in. Like, it was so obvious to the market back in Feb that we had all this extra demand, especially from Mexico, that there's a reason for July D's corn to be 40 over. July to break an extra 50 cents beyond December, I think is in part because there's so many people on that side of the boat that were betting on that. And then you combo record safrina crop in there as well. I think that was just probably a perfect storm for this type of a move.
Yep. So I think, okay, so, you look at, we'll have a lot more information on Monday, but, if the stocks were to come in tight, for example, maybe that means that spreads have gotten too wide. We'll call it step forward spreads, where, hey, like maybe we got ahead of our skis because we have all this corn. And all of a sudden it kind of ends up still kind of pipeline in the end. And that's what's going to be so interesting. I think, even if you have a big crop coming and you do end up with that's why the stocks report's important, come in relatively tight, you're still going to have kind of pipeline. And we're at super wide spreads, maybe we got ahead of ourselves there too. So there's so many factors here at these levels with crop insurance, what the stocks end up being, where the carry is in the market, and you're gonna have a massive managed money short. So it could be lots of things that happen with spreads. It might not even be flat price. It could be basis. It could be spreads flattening out. I mean, I could see a lot of different scenarios based on kind of how that report comes out.
Yeah,
and we gotta finish it.
Yeah, right. That's the last couple of years, right? We had dry finishes, and then everyone was surprised. Weather has been perfect, obviously so far. I think it's been pretty good. And but one thing I would say too about like those that because what's applicable about what we're talking about today? If we have a lot of people that have bought up elevated insurance policies this year, for those that have not had the best weather, let's just say your county comes in at exactly its county projected yield. That price floor for corn would be around 446.5. That's 95% of the 470 spring price, which thankfully the price was much more elevated. And we have these elevated policies this year. For those that are not experiencing all this great weather, we're very likely going to be seeing increased payments the lower we go. And unless we start to outpace yield, right? If county yields are 5% above their projected, now all of a sudden that floor drops to 425. If they're 10% above projected, that floor drops to 406. So those are the things we have to start thinking about is how good is weather for your area and how does that impact where these insurance floors come in? And what is the farm bill that you've elected for? If it's PLC, you know that there's a much stronger floor that is not impacted from higher county yields. If it's our county, unless they raise this percentage that they're talking about, there's a good chance it's the same problem for our county where the county yields come in way higher than expected, and that lowers where that payment structure starts. So it's really kind of a tale of where you are and what's the weather you're experiencing for how you deviate with this market.
Yeah, 100%. The last point I was going to make, just not to go back a step, but when you talk about the importance of the stocks report and you think about how the futures market, the delivery system's all on the river, right? So if you think about where the good crops are and where things have been kind of tough, The Delta's been kind of tough. Southern Indiana, Illinois have been kind of tough. Really, the best spots have been, call it northern half of Illinois and west, right, which is not on the delivery system. So you get super wide spreads, and then now you have this, where it could be tight. That's where things get really interesting, east versus west, going into the end of, call it August, September, October. I think that's where there could be some really dislocations on, fund positioning on the paper versus what could happen, in the cash markets. That's, again, a lot of ifs there, and we'll see when we get there. But I think that could be kind of an interesting thing too as we go down the road.
Well, very good, guys. We just came into the open here. We got July corn down 4 1/4 now. 4.12 is the last. July soybeans are down 4 1/4 as well. 10.42 1/4 is the last. And July Chicago wheat's down 6 at 5.29 1/2. Tomorrow morning we'll have export sales. Weekly export sales will be out at 7:30 Central. We'll take a look at what comes out there. Talk about it in the war room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.